coaching this generation's real estate superstars. Harris Real Estate University.
Now, let me tell you why this is important. If you have a loss on your real estate, and we're talking a paper loss when you're holding it because you're using depreciation and all these other means to create paper losses. If you've got a loss on your real estate and you make under $100,000 taxable, you can only take a write-off of $25,000 of that real estate loss. If you make over $150,000, you can't take any of the write-off. Between the 100 and the 150, it phases out. Unless you're a real estate professional. A real estate professional gets the get-out-of-jail-free card. No matter how much money you make, no matter how big the real estate loss is, you get the full amount of the write-off. So let me say that again. If you're a real estate professional, and remember that means the two-tier test, number one, that you spend more time in real estate activities than any other business, and you have at least 750 hours a year. You meet that two-tier test, then no matter how much your real estate losses are, paper losses, you get to take those against your income. So do you see that's the whole thing that this all hinges on. Now, before I go any further on that, I want to just take a step over for a second, and I want to put an IRS auditor hat on. And I'm not an IRS auditor, I don't want to ever be one. But what's happened in the last couple of years is the IRS found that a lot of people were claiming they were a real estate professional, and they weren't. And so they started a targeted audit here in California. Did anybody know? Okay. I know of a number of people who got hit with that. I've got an open tax form I have, and so I was hearing the stories. And what happened is the auditors came in and they had audit teams, but from that they set the standard and they have case law set. Now, the good news is, standing here today, the case law got set because the IRS came in with this crazy idea that under the law, when it said real estate activities, it said if you brokered a deal, that counted. So they came out with this initial idea that you had to be a real estate broker and a licensed broker to get that deduction. So if you get given a $10,000 tax credit, you pay $10,000 in tax. Well, these credits were closer on the order of $50,000 or $100,000 for buying property, and you could take them back up to 5 years against taxes you'd already paid, and the IRS would give you a refund within 45 days. Yeah. Now, that one's closed. Why weren't you here a year ago, Diane? But here's the thing. I suspect we're going to see it again. Watch for something in Tennessee.
Tennessee.
Yep. Anybody in that area? Yeah. Not yet?
We have a lot of students around, we've been getting a lot of email from Nashville, Murfreesboro. We have lots of people, so I want to pick your brain on that.
Yeah, I mean, it hasn't happened yet, but I'm certain it's going to happen because it's called the Go Zone credits. It was so successful in getting people to invest back in Mississippi and Louisiana and those areas that were hard hit. So that one stopped, but I suspect we're going to see another version of that. And again, it's very interesting that it's specifically targeting real estate professionals for the benefit here.
Why is that?
I think the reason, I don't know if it's inadvertent, and maybe it's just because they...
Government doesn't do anything inadvertent.
Yeah, maybe I always get it confused. It's the NRA. Which one? NAR, thank you. The ones without the guns. Okay. Yeah. NAR. Maybe they're that successful in lobbying that puts it in. And maybe there's something that it's on purpose that, hey, at least real estate agents know what they're doing when it comes to properties. Could be, And by the way, real estate professionals also includes lenders, architects. It's someone who's involved in real estate. It could be a developer. But again, if you got that other job that's completely different, then it's not going to qualify.
Diane, could you define paper loss?
Sure, paper loss. Okay, thank you. Great question. When I was talking about the real estate, a lot of times you look at cash flow. And I mean, you were talking about you've got property that's cash flowing, which is awesome. So you've got your monthly payment. When everything's said and done, you've got a couple $100 a month you're putting in your pocket, maybe a couple thousand more. Well, the benefit you've got with real estate is you get to take depreciation.
For free daily coaching, go to timandjulieharris.com. Harris Real Estate University.